Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. I'm hosting a multi-state operator panel on the 15th of May. We'll be discussing a lot of what this article is going into in terms of all of the cash flow deals coming from Canada down into the US, as well as the multi-state operators who are looking to expand. There's a lot of international presence, a lot of opportunity, but there's timing. Right now, the valuations, the speculation, the consolidations, all of that is driven on time. And 18 months from now, that'll shift. So right now, there's a lot of money being driven into beverages in Canada as the edibles go online and concentrates become legal in Canada. A lot of investment is being driven in that direction. In the US, you're still seeing multi-state operators because that's a play on land and real estate. You're seeing data because that's always valuable. What you're not necessarily seeing is consumption lounges. Ultimately, there's going to be a huge influx of cash as people try to buy up more and more opportunities, whatever that opportunity is, if it's data, if it's a multi-state operator, if it's a producer, processor, retailer, or consumption lounge. Either way, money is going to be flowing, but the valuations will shift with time. The demand will shift. The regions will shift as globalization picks up and national legalization in the US. People will start to pick better territories for better products. Puerto Rico will be a manufacturing destination for anybody trying to take something from an agricultural community to make a finished good. Their tax offerings down there are bar none. And so you'll develop regions where California might grow, Puerto Rico might manufacture, New York or Vegas might sell the most. Things will start to play out, but it's all going to be influenced by that capital, and that capital is shifting. It shifts all the time, and the speculation, the margins, the pricing, everything is going to start coming in waves and shifting, and everyone should be prepared for that. They need to be nimble, but they need to be active. Most importantly, people who are thinking that there's going to be a legacy are going to be left behind while everything else is being consolidated. Curaleaf notches the largest U.S. cannabis acquisition with nearly $1 billion deal. The Massachusetts-based cannabis company Curaleaf Holdings announced Wednesday it agreed to purchase a leading West Coast cannabis oil manufacturer, Cura Partners, in an all-stock deal valued at about $950 million. Curaleaf's move to acquire Cura Partners, which owns Select, the leading cannabis brand in California, Nevada, and Oregon, according to independent market analysts, marks the largest deal based on dollar volume so far between U.S. cannabis operators. The company also stressed that it will combine Curaleaf's East Coast footprint with the West Coast focused Cura Partners to create the largest U.S. cannabis company by market cap and combined 2018 sales. The combination of Curaleaf and Select is a perfect fit, Curaleaf's CEO said. With our industry-leading capacity, expansive retail distribution network, and Select's impressive sales and marketing capabilities, they intend to meaningfully accelerate their top-line growth strategy with the addition of the Oil Select product range. The deal follows a wave of consolidation in deals in the cannabis space that was headed 2 weeks ago by an agreement reached between Canada's Canopy Growth and U.S. multi-state operator Acreage Holdings. That deal was valued at $3.4 billion on the day the agreement was announced, provided a path for Canopy to access the U.S. cannabis market, which is roughly 10 times as large as Canada's. The agreement, however, is contingent on whether the sale of cannabis in the U.S. becomes federally permissible. After an expected close of the Curaleaf Cura Partners deal in 2019, the combined company will have a presence in at least 15 states. The merger is expected to drive cost savings, including a 25% reduction in the processing costs and a 50% drop in Select's material cost. News of the deal drove Curaleaf shares up 15% last Wednesday afternoon following the deal's announcement. Cannabis vaporizer company Pax Labs raised a benchmark $420 million in funding. Pax Labs, a San Francisco-based maker of vaporizers, confirmed it raised $420 million in equity financing, a record for U.S.-based cannabis company. The firm said that the round included both new and existing institutional investors, including New York-based Tiger Global Management and San Francisco-based Tau Capital Partners. Pax raised nearly double the previous high for a U.S. cannabis company, a $250 million debt financing by California-based multi-state cannabis operator MedMen in March. This financing round allowed them to invest in new products and new markets, including international growth like Canada, and exploring opportunities in hemp-based CBD extracts. According to technology publications The Information, Pax initially sought to raise about $150 million, but surging interest from investors boosted that figure. And it's a further signal that the floodgates are starting to open, given that institutional investors have invested. That's not stopping the explosion of cannabis companies going multi-state and filing IPOs. As another billion-dollar U.S. cannabis company is going public in Canada, this one will trade on a little-known Toronto NEO exchange. Columbia Care, which has operated in 14 states and territories plus Malta, will begin trading Monday on Toronto's NEO exchange under the symbol CCHW. The company will list via acquisition by Canaccord Genuity Corp., a specialty purpose acquisition company, with a valuation of about $1.4 billion. NEO considers itself a mini board exchange and has more stringent listing requirements than the CSE, according to the exchange's chief executive officer. For Columbia Care, the NEO offered a smoother pathway to a potential listing on the New York Stock Exchange or NASDAQ if U.S. laws change, because its listing requirements are closer to those of the big boards. For now, the Canadian Stock Exchange remains an undisputed leader in U.S. pot listings, with about 65 such companies trading on the exchange. And with that, we're going to wrap this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out.